So, evening. Hope you guys had a fantastic day and a fantastic weekend. Today we're just doing a market review for today's price action, and then kind of a weekly outlook for the rest of the week. Kind of what days I'm looking to trade and what I'm expecting to unfold. So, hopefully you caught the market review from uh, the week last week. That's also posted up um, into the YouTube vid section. So, pretty solid price action last Friday, and then obviously the weekly review kind of elaborates on that price action there and any questions that were answered or asked during that stream. So this week, fresh week with a pretty decent economic calendar. And mark out. Already have the Sunday opening. Overall price action in terms of seasonality and stuff, whatnot, is bearish price action for December. So we've kind of come on with that expectation from start of December, but obviously as we have this nice displacement from Friday, we kind of continued that outlook for this week and onwards. All right, so as of right now, I was actually at the start of this week looking for, like I said, lower prices, but also potentially a classic sell week, given the news profile. But let's actually look at the news profile first. So just based off of before, obviously we can look at the price action, look at the economic calendar, kind of what to expect coming into today, what I was looking for into today, and obviously what we'll get for the rest of the week. Tuesday, we have all of this, mostly looking at that unemployment rate being released on Tuesday, 8:30. Core retail sales month over month, those are kind of the two larger ones, but mostly unemployment rate there. CPI, those are the big two ones that you're kind of looking at as red filter news drivers for the week. So anytime you have an early news driver like this, paired with a sentiment for the week, you typically are looking for that to potentially be the high of the week or starting to move towards the expansion. So given that or at least I'm bearish for the week, and Monday through Wednesday has a 70% chance when you're bearish or bullish to create the higher low that week, then this is kind of my major news driver that I'm going to be watching for this week, potentially give me a setup. Obviously, later ones are also preferred. So when I look at this economic calendar and I look at the fact that, okay, we're likely to go down potentially even for these sell stops pools, I don't think we're going to get all the way down there this month, but looking right now at the sell side resting below here as a current draw on liquidity, I'm looking at this potentially as a classic sell week or as potentially, Tuesday high of week, something like that. But that's sort of what we're seeing today and coming into even the Asian session, we're starting to move lower. It's likely that you see a clean weekly profile this week, which, not to place a lot of emphasis on that, but given the conditions, I'm actually looking for a potential weekly profile to unfold and base some of my analysis on it this week compared to, like we said, last week and the week before that, kind of just scrapping that as a purpose, as a tool to use. Not saying that this week I'm going to be drastically changing the way that we're trading and looking for bias and whatnot, but that is now a tool that I can implement back into my analysis to potentially use as a confirmation and confluence with the rest of the remaining bias. So when I look at this economic calendar, best case scenario, I want this to be high of week, this to be accumulation, this to be expansion, or just, whatever part of this section here, this is also expansion, then the TGIF on Friday. That would be the best case scenario. Now, given with the Monday price action, like I said, we may be looking at just a continuation profile for tomorrow. But obviously, all things included with pre-market, we still have to watch that and see. So I'm hoping that we see a very classic sell week with Monday through Wednesday becoming the high of the week, and we see continuation, preferably into Thursday, Friday, potentially offering a retracement. Now, Thursday CPI is not as common as a Tuesday CPI or something. Doesn't really matter, but what you're more looking for is the fact that it's a late week news driver with an early week news driver up here. So most times when you see this, the earlier one tends to be more manipulation based. All right. And the later ones obviously tend to be more expansion based. All things considered, right? That's the general kind of rule of thumb. So that was kind of my analysis going into this week. And I'm going to obviously kind of go through this week in terms of high probability, low probability. You're looking this main chunk here becomes the highest probability. This would be maybe medium. This is still also medium. So I don't exactly look at any of these days necessarily as low probability. Just based off the economic calendar and based off how the price action is moving right now, I would think that all these days are probably perfectly fine based off of obviously an economic calendar perspective. But as you get into pre-market price action and what previous days do coming into that day, that's still going to be important. But the highest probability setups that I'm looking for are here. All right. And then later into the week, we're kind of looking at not low probability, but probably less so of an expansion based range, and therefore kind of more December-esque type of price action that you're going to see where it's scalping and a little bit more challenging price action. All right. So going to today's price action, that was kind of what I was looking for. So, okay, I'm looking for lower prices. Obviously, actually, let's pull this up again. Here's a question for you. When is Monday deemed as high probability? Guys who have the PDF or guys who've been studying with me for a while, there's a couple of rule of thumbs. Number one is obviously close proximity to the previous weekly high, previous weekly low. Excuse my handwriting. Previous weekly high, previous weekly low is, in close proximity to the Monday open. That's something as a short-term draw on liquidity to act upon. Second thing, like Slander said there, when the previous weekly target has not been yet met. So let's say Friday is still expanding and something has not, been met in terms of a draw on liquidity or whatnot. Occasionally look for Monday to be an expansion day associated with the previous week. So both of those kind of conditions are not perfect walking into this Monday, but something to consider. And obviously, one thing of interest that you'd be looking for before any of the price action prints is that Tuesday, you still have this 8:30 news driver, like I said. So Monday, based off of price action inside the charts, we're looking at this as potentially a higher probability day. And you're going to be able to see that in the morning of. Based off the economic calendar, and you look at this, but without seeing any price action, I would probably assume that, okay, Monday's a day you may want to skip based off the price action in the morning. Really depends, but all things included, I would be perfectly fine skipping Monday, looking to trade Tuesday, Wednesday, Thursday, potentially skipping Friday, right? So it's not like going to be a big deal or anything if you miss Monday and you look at this as, oh, this is the one opportunity for the week. That's not true. But based on the economic calendar, telling you one thing, price action is going to tell you maybe a different thing or confirm. So looking at the 4-hour chart, obviously Friday, that nice run down into the previous weekly low, tagged that out and formed a large imbalance coming into this week. So with that inefficiency in mind, and actually the close proximity of the previous weekly low, this should be telling you in terms of price action perspective that, okay, Monday potentially has a high quality draw, institutional order flow that's pretty one-sided coming in from last week. You can maybe assume, okay, there may be a decent move to take today. Doesn't mean it's going to be this perfect large expansion range trade, but even just a scalp down to that previous weekly low before it runs away is something to maybe consider as a setup. All right. So like I said, bearish price action I'm expecting for this week. We have a nice order block pair with a gap on the 4-hour chart. Price is trading into in pre-market. So looking at this in terms of a institutional order flow perspective and liquidity, you have relative equal lows down here. Hopefully that you can see relative equal lows, short-term swing high up in here in premium of that dealing range. You can mark from here to here if you want. Either way, inefficiency plus gap, or sorry, inefficiency plus liquidity pool. Runs that out going into the 9 a.m. open. Like I said, or I hadn't actually mentioned this yet, but we had no high impact news today. So what becomes your most, not high quality, but your main focus should be on what key times on a non-news day? 9:30, looking for that potentially as manipulation, but macro times and 9:50 would be the main easy objective targets to look for in terms of just smooth, easy, 2-hour type of runs. So macro times are going to be the main specific ones you could be looking for in terms of just easy trades, but like obviously 8:30 is not going to be a kind of main injection of liquidity likely to form the higher low of the day. But nonetheless, I think, excuse me, looking at the order flow coming into it, looking at the close proximity of the previous weekly low, looking at the fact that we had no news driver, to me, I had a bearish bias coming into this morning or coming into the day, but also in the pre-market price action. I think this kind of confirmed it for me. I saw a couple of people, or at least one of the dudes that I'm privately mentoring, have a bullish bias today based off of a profile. And I want to emphasize the idea that profiling is tertiary or later in your analysis. You cannot base any sort of analysis, whether it's a weekly analysis or a daily analysis, off of the look of the session, right? You may come into the day and you may look at the 15-minute chart or the 1-hour chart and see that a key time is placing in a swing low. But that does not mean that that swing low that's being placed in is exactly the high of the day or the low of the day. And you cannot base your analysis on the fact that at this key time we're making a swing point. Therefore, I'm going to elaborate my bias and build everything off of that one specific point. It doesn't work like that. And I talked about that last week in the weekly outlook. Is this idea that you need to be building a bias off of things that are always objectively true. Okay. A swing point during the London session is not enough for you to reliably build a bias on multiple times, because sometimes it's going to work for you. Other times, like in this example, it's not going to work for you if you just specifically look at profiling. That's why bias is first, and then you go to profiles. So with the idea in mind of already you're looking for lower prices today, what would your potential bias or what your profile be expected as you walked into this day? Well, you could be looking at potentially a New York Open reversal profile. Given the fact we have no news, you see this relative equal lows printing here, and this kind of, it wasn't per se the most high resistance move up into this gap, which sometimes is trippy. But I think given the fact that you have 930 volatility injection and also no news, and you're looking more for a 950 macro, I don't think it would be terribly difficult to then see, okay, this is the profile that it is, right? Nonetheless, comes up into premium, sweeps the bias of liquidity from, this actually might be the PM session high. Well, it does, but it's actually a different one. You should have SMT inside of this gap, if I'm not mistaken. This is Monday. Do you not? Might the weekend? Maybe you don't. Oh, you have it between the 930 open. Okay. You should also have it between some sort of POI. Unless I'm missing something. Am I tweaking? Well, anyways, okay, there's session SMT at the highs, but I would like to see an SMT at this point. But nonetheless, there's SMT here at the daily high. SMT at the session high, like I said, 930 creates this energetic run lower. Normally, like I said, with non-news days, you're looking for that to just print on the rise. If you're looking for the profile, that's not a bad entry either. I would just like most times to just sit out, given the fact that it could have been a double Judah swing. But right at the open, you already have this 5-minute changes day delivery. You could look at the shifts. You could look at the inversion fair value gap. You could look at the changes day delivery. All of points that are obviously important for shift order flow on the 5-minute and during the session to now be in favor. And therefore, you can start to look at and trust 1-minute PD rates are going to start to hold. So right at the open, you just have these beautiful entries. If you're looking for this, almost perfect. Just like it's just every single one, especially even on the breaker. But you have inversion fair value gap entry. You have a premium entry here at 936. You have another fair value gap plus order block entry at 942. You have another volume bounce here with the order block. Excuse me. I'm just going to do it quickly there. Volume balance plus order block. Then you have another entry here at 954 with an efficiency and premium. You have another inefficiency here being used in premium of that range. Another one being reused here at 1006. So all of these entries are available to you. And eventually it runs back down and obviously tags out the daily pools from the current day, but also the previous weekly low, as we annotated before, as a likely target for, for the session. That should be another pool of liquidity that you'd be focusing on. But any of these, are all entries 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, all before it runs out the sell side pool there. So multiple different entries all during the macro times, before the macro times, and even after it if you're looking for a retracement opportunity. Very clean day. Unfortunately, I wasn't able to capitalize today. I was extremely tired by the time I woke up, so I was realistically, I just didn't think I was going to perform well, given the fact I just slept terribly. So I decided to just sit out to today. I thought the bias was quite clean, all things considered, but given the fact I had plenty of opportunities, I just didn't want to screw anything up with my lack of sleep. So decided to just sit it out based off of a performance standard. And I look at myself as a professional mental athlete, and you should as well. So if you feel like anything is wrong with obviously your mental space, you should assess that. But physically, if I don't think I'm going to perform well on a physical plane, I think that's just as important to me as my mental in this type of business. So it's it probably seems like a very annoying answer for someone. Oh, why didn't you trade today? Oh, you were tired. Well, it isn't, but I'm going to treat my trading the way that I would treat myself as a athlete. So I got to take certain precautions to make sure I perform at my absolute best. But nonetheless, still a very high quality day. Though I wish I would have traded today a little bit, just because of the fact that there were so many clean entries. I know I could have just smashed out of the park. But coming off a nice win on Friday, not that it matters, but I just have no urgency. You really shouldn't either. Is just don't have this urgency or expectations to trade every single day or any day that you see this. You may see this unfold. You're like, oh, I might have missed this, and that may be true. You may have missed it, but also understand the fact that it's still Monday. And especially if you're struggling with bias before this, or you just thought it wasn't going to be a clean day and it happens to be a clean day, don't double back down and say, oh, I should have traded, or oh, I should have seen this. That may be true. You should have seen it, or maybe you can adjust to see as to why you should have seen maybe today was going to be a clean day. But that doesn't mean that should have, could have, would have, and pouting over it is going to do anything positive for your growth as a trader. So there's obviously things you always should be looking to improve on. And if you didn't see today as bearish, that could be something to improve on. If you didn't see maybe today as an opportunity to be a setup, I don't think that's necessarily bad. But obviously, coming back in and maybe looking at it with a insightful manner of, okay, how could I improve today? What could I maybe look to adjust or adapt on? That's the way you want to approach trading in general, just with the absolute positive mindset of just, yeah, there's going to be plenty of setups, plenty of opportunities, and missing one or maybe reading one incorrectly is not going to make or break your trading career. Simple as that. All right. And either way, there should be parameters that you're setting on yourself to make sure that you're not doing anything stupid. So for today, for example, it's a Monday before 8:30 news. So if that's one of your protocol rules is I do not trade days before an 8:30 news day, there's no reason as to why you should be looking at today as anything negative. That doesn't mean you should still be looking at today as, okay, there's a day where it created setups opportunity, right? And that should further increase your confidence in both the your skill as a trader, and also the fact that there are a plethora of opportunities, even in like a week like this or a month like this where it's maybe challenging price action. You see that even on the days that you may not be trading, there are still opportunities, right? So there should be parameters in set. So for example, for today, going into today, not seeing the price action. So yesterday when I was developing a bias for today, I had seen the fact that we had no new week opening gap, and also the previous weekly lows in close proximity. So I kind of just think instantaneously continuation, just based on the fact that we had no new week opening gap. And I look at this, it's only a couple to like 20 points or something. Yeah. But it's basically opening up right on where the close of Friday was, so there's nothing, no drastic change. But either way, I'm setting parameters for myself. So coming into this, I was thinking already, probably going to trade into this gap, run for ERL, IRL to ERL, simple, very, very simple move. If that maybe didn't transpire, the other thing that could have happened was, if I go back, you have a ERL to IRL move. So I would have been fine if today, for example, was already trading towards that relative equal low, that previous weekly low, and I was looking to take a setup. I would have just either taken the setup to the ERL and then expected a very high resistance move back up into the gap. I probably wouldn't have just taken a short if we were close to that low and just continue to hold it. So it was either going to be an IRL to ERL move, and that's what I was looking to trade, or potentially just a swing to Z, ERL to IRL, where it runs at the previous weekly low with SMT, and then it high resistance trades back up into the gap and then sits right inside the gap for tomorrow. Those are the two conditions that I was looking for based off of the price action coming into the day that were likely to unfold. Now, if today, for whatever reason, had just high resistance traded up or just completely traded through this gap, then I don't really have a good understanding of why that should be going on. And that would be a reason to potentially be sitting out, and waiting for the answer key to release, basically just waiting for 1600, come back in, maybe redo their bias, redo your outlook as to why this is happening and what that means, obviously, for the next day. So I have parameters and set that have, okay, if it's bearish, this is what I'm looking for. If it's bullish, this is what I'm looking for. If it's going to be a no trade, this is what I'm looking for to happen, and setting those as very clear parameters, or potentially just, even in the morning, as you're looking for maybe the 930 candle to print, simple as that. It's like, okay, what are you allowing to be within reason for you to continue your bias? What are you allowing that's maybe without reason that you may have to just sit out completely? And what is something that is blatantly obvious that you would have to see in order for you to confidently flip bias from a higher time frame down to a lower time frame perspective? Because obviously you're not flipping your bias ever from just a 5-minute candle or a 15-minute candle. You should, if you're doing that, you should go back and make sure at least that it's double checked with the 1 hour chart at a minimum, So that to be said is like, obviously every single day is something that could be ruining your psychology. And I think especially like something like this, I know is probably a struggling point for some people, even in here, or if you're going to come back and watch this later, you may have a hard time today, and you have to be looking at what are the things today, for whatever reason, that, tipped me off and made me perform that was either in a manner that was, beneficial to you, and you acted within your rules, or made you do something that was outside of your rules. Because you must remember that just because you're green for the day, or just because you took extra trades, you ended up being positive for the day, that is the worst thing that can ever happen, because it is going to blind you from your negative habits. And it's frustrating because you end up doing something negative and then you get rewarded for that negative habit. And if I were to critique you, or for someone other than me, maybe your peer were to critique you or step in or say something, and if your instant response is to defend, to say the fact that, okay, at least I was green, or at least I did X, and not the fact that, yeah, I broke my rules, this is not something that's long-term going to be sustainable or has anything to do with me being a successful trader. If you cannot look at it like that, you're going to have a very hard time getting past that. So I encourage you to look at ideas of, okay, even if you're green, even if you have a nice P&L, what was your performance for the day? If you were supposed to be trading today, say it was within your rules and that gave you a pretty clean bias, and you were unable to execute, that is something that you have to look into. If today, say you were looking for bullish price action, and as soon as you saw that 930 candle come down, you're flipping bias, you're spamming shorts or whatever, I don't think that's a good practice either, because I think then you're lacking discipline inside of your bias, and you don't have any confidence in your bias. So these are all things that you have to be aware of. And obviously journaling is going to be a major part to kind of spot those. And if you're struggling with journaling, we just did a video on that not too long ago, I think last week, December 5th, about journaling techniques and whatnot. So if you want to go back and watch that, you can. But every single day, this is the process, which is you should be reviewing what are the things that maybe I missed, what are the things I did better than other times, what are the things I want to keep the same in terms of my technical, which obviously we do here, but it's not all the time on stream that we do a full kind of psychology review. But you should still be doing that nonetheless, which is going back and reviewing, okay, how did I perform mentally today? Is there anything I need to be keeping track of? Is there anything that I need to improve on? If you're not doing that, you're cutting yourself short. And what you're end up going to see is your streak of luck is going to eventually run out. And one thing goes wrong, or two things go wrong, you're going to see your entire progress crumble instantaneously. All right. So keep yourself on the grind and make sure you're doing it honestly and properly. If you are failing to do so, I promise you, this will not work out for you. So learn obviously what you're doing wrong, or take insight, or ask others for help. You could ask me, you could ask other people, anyone in here I'm sure is willing to help you out, but just make sure you're seeking proper advice. Yeah, so that's kind of my review for today in terms of price action and lower time frame stuff. I don't want to get too nitty gritty in terms of the price action, because like I said, I didn't take an execution, so I don't want to act like here's your perfect example. But obviously, if you want to come back and look at this, I don't think it's too challenging to see all the different things that you always see in terms of price action print. So I'll leave that up to you if you want to go back and look at all the technicals for the day. It's a very, very clean New York Open reversal profile. So I trust that you probably know for the most part what's kind of going on today and what to expect. Like I said, for tomorrow and Wednesday, those 2 days, I'm going to be studying heavily to look for any opportunities in terms of lower prices, given the fact that I have a bearish bias for this week so far. If in the pre-market price action it becomes funky, my default kind of setup would just be, wait, sit it out, maybe skip the day, or let the opening range price action print. Given the fact that we have 8:30 news tomorrow, my main focus in terms of time will be between the opening range, so 9:30 to about 10 o'clock, maybe 9:30 to 10:10, to try and find an entry, preferably using this volatility injection as distribution towards my target, whatever that may be for the day. So preferably seeing this as manipulation, or maybe 9:30 as manipulation, and then this as distribution for that day. Like I said, if pre-market is weird, if it is just chopping around or whatever, I'm going to sit out tomorrow and look at Wednesday, Thursday, or maybe just take a scalp tomorrow and be done there. All right, so set those protocols for yourself. Do not just react. You must anticipate and predict in some sense, and then kind of change it up as the information is given to you. So this will be kind of the weekly outlook reference that we're going to come back to throughout the week. And obviously on Friday/Saturday, when we do our weekly review, this is kind of directly going to be used. So it's subject to change, obviously, but this is the reference point. So for the past 2 weeks, we've been doing these weekly outlooks where I've been talking about, okay, what days are high probability? What am I looking for? And for the past 2 weeks, we go back in on Friday and kind of adjust and adapt and see what obviously could have changed, what went well, and been doing decent so far. So make sure that obviously you've journaled if you have not already. Keep yourself honest and please do the work that is needed to succeed. Yeah, if you have any more questions, you can put those in the chat. Otherwise, we'll try and wrap this up as quick as possible. And I'll leave you to the rest of your night. I entered during macro when you said prior to macro, if it. Yeah. I'm not sure if that's a question, but yeah, correct. New to your Discord, what time frame do you like to enter on? I typically trade on the 1 minute or the 15 second. That's just the I've been trading with the 1 minute for about 3 years now, so that's kind of the time frame I'm most comfortable on. But yeah, either the 1 minute or the 15 second is what I normally try and get a trade off of. I to be honest, I don't suggest that. So for most people, I suggest the 3 minute or the 5 minute. Those are great time frames. Otherwise, if you're more of a session kind of trader, precision is your meta, then the 1 minute is something to study, but definitely probably takes 2 times the amount of experience to really understand and grasp than something like the 5 minute, But that's what we do on stream is work on the 1 minute and take trades on the 1 minute. Missed the beginning of the stream, was curious on your narrative behind the bearish idea. I took shorts, but as retracement to 50%, not the whole swing. Shorts to 50% of which? Talking about 50% to here of this? So, I was looking at the idea that in terms of the higher time frames, so the 4-hour chart and the 1-hour chart, with the previous weekly low here, acting as an ERL, time-based ERL, right? Very juicy pool of liquidity, and the inefficiency here, paired with the bearish order block, it was going to be an IRL to ERL move. Institutional order flow given from last week and the week before states, pretty bearish price action at least. So institutionally looking for lower prices in terms of the higher time frame and lower time frames. Like I said, profile wise, I think you see this kind of not crazy high resistance, but generation of liquidity pre-market in here. And obviously during the London session as well, you have this kind of consolidation range. So the idea and the narrative for me was IRL to ERL. So I didn't think it was going to stop. If it was going to move here and it was going to come down to London session, then we're leaving all these relative equal lows possibly for tomorrow to manipulate. If I think it's going to be trading into this gap, reoffering basically a short entry, then this is not going to be the terminus. The terminus is probably going to be down here, for example, or lower. I'm just using this as a relative reference point. So if I think that, okay, in terms of a higher time frame, like the 4-hour, right? I think that, okay, potentially this may be the SMR, right? And this is a gap plus an order block that price is using to trade into. I don't expect then as a result that price at a minimum is just going to go from here and trade right into this swing low, unless for whatever reason, like I said, it's consolidating for the next day. I think in a greater scheme that we're probably to go lower, lower, way lower than the previous weekly low, whatever reference point that we'd be looking for over here, right? Potentially even the previous weekly low all the way from November 21. So when I'm looking at this in terms of price action and where the likely draw is, I think past the previous weekly low would be the expected DOL, right? So the previous weekly low, given the close proximity and given the IRL to ERL, seems like the likely terminus, at least for the session or for the day. Not to say that London session and Asian session and new week opening gap is a bad exit, so that's perfectly reasonable if you want to just take it from there. But yeah, in terms of kind of what I'm looking at in terms of a higher time frame market maker sell model, this is the low hanging fruit, if you will, from the short off of the gap. So you have to remember that sometimes, although we're taking the short off of this inefficiency, for example, or this inefficiency, we're taking it with the idea that potentially the day and the session are both going to be printing lower. If not, the week is also potentially bearish, right? We don't really know this for sure yet, so we'll put a question mark there. So let's just kind of cross that out. But assuming that you're taking shorts off the idea that this is the high of the day, well, then you have a couple of things to consider, which is obviously the session should be bearish, but also the day should be printing lower than the midnight opening price. So the midnight opening price is here. So if I were to just take it 50% of the range, the candle is going to end up closing like this, right? I want the candle to be open, high, low, close, and closing past the opening price, right? So we look at midnight opening price here, has to go to and past. So this is obviously in close proximity to it, not saying that it's going to just tag there and close off, but I like these relative equal lows paired with everything I just mentioned before, plus the fact that if the day and the session are both lining up and the New York session is going to be the high of the day, then you should be able to confidently trust that, okay, if I'm shorting it here, I'm not looking at this as a scalp. I'm looking at this as I'm going to try and take the entire session range, if not the entire daily range. That's what's going to be offered to me. But taking partials, closing out positions is going to be obviously paying the trader no matter what. So never look at that as a negative thing, but always look at it potentially as what could I have done to maybe extend this trade further? And the fact that you're asking that question to me is really all I need to know, that you're going to be very successful in this. So hopefully that makes sense and answers your question. Of course, Rahul, Macro would have been the best entry for shorts, but when coming into the day at 9:30, sticking 15-minute and hour fair value gap really reduced the confidence of a particular bias. That's good. Oh, stacking. Oh, I see. Okay. So yeah, that's the thing, right? Is like obviously when you get down to the lower time frames and you see this run up here, right? You cannot base your bias off of one thing. So like I was talking about earlier of the fact that, okay, London session may have made a swing low here at a key time. That itself does not necessarily constitute, that can't be the starting point for the rest of your bias. Same thing with if you have, any other starting point that's not based in some sort of market truth or objective based truth that is always going to be true everywhere. Same thing with this. If you have the 4 hour, the daily, the weekly, the seasonality, even I think the 1 hour is probably slightly bearish, but then you come to the 15-minute chart and you see gaps. That is one coin that's tossed into the scale weighing against the other stuff. So if, every single time you come to the charts, you're always going to be able to, and you should be arguing both sides. But as you see the alignment of multiple different charts and multiple different narratives all kind of blending into, we have one specific bias that likely is going to unfold. Don't let, the presence of maybe one POI or one specific thing completely outweigh the other tools. Still obviously reference them. And if they start stacking up, then yes, consider it. But like in this case, this is maybe the only couple of things that may be opposing that bias. But when you look at the narrative and like I said, everything else before that, maybe that kind of helps out with your conclusion of your bias. But even if you got it wrong, you're learning from it. So you can take obviously this information and put it into other days. And that's why the logic of things is the most important, is knowing how to read the price action that you're given rather than assuming that all the price action looks the same and you can pattern it. You cannot pattern it because certain price action like this will be bullish on the day. Other times this will be bearish. And the difference between the stuff is the things that aren't in the charts. So your experience behind it, your understanding of why price action is doing something, where is it going next? That narrative part of the analysis is what's going to give you bias, which is then going to give you drawn liquidity. It's three different things, right? And must start with narrative. So you must start with things that are objectively true rather than subjective, and then base your bias off of that. Right? Hopefully that helps. So not a super in-depth market review today. Just wanted to kind of cover it briefly, get some thoughts out, and do the weekly outlook stream as usual. But we'll obviously do for the tape or for the private group. I think we will be doing a stream either tomorrow or Thursday. Tomorrow, Wednesday, and Thursday are the main days I'm looking to stream. So the drill will be based off pre-market price action and kind of all things considered coming into the day. And then for public, we will be doing the weekly review stream on Saturday/Friday paired with the Q&A, and then maybe one or two mark reviews sprinkled out through the week. But obviously that'll be on a day-to-day basis, and you will see pings before then, and they will all be recorded and posted up on YouTube after, just like this one will be. All right. So hopefully you guys enjoyed today. I know, like I said, it wasn't the most in-depth stuff and not a lot of gems, but hopefully just it made sense, and you're just reviewing together, give you some confidence for the day and cleared up anything that you may be struggling on. All right. So if you got any questions, reach out to me. I think I'm going to do a 25% off sale or something for the Christmas season up until New Year. So we'll kick that off soon, and I'll post obviously more data about that in the announcements page. Yeah, like I said, questions, send it to me, or otherwise you can ping me in the chat. Until I see you guys next time this week, take care, journal. Like I said, if you have not already, please, 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 take care of yourself, and I will talk to you guys very, very soon. Peace.